Here's a two-sided trade idea on Apple. So what we have now is a 3, 4, 5 day pullback on a lot of names. Now, you cannot be too upset at the bit of the rest, the pause that we've had on a lot of names, right? We've been on a month and a half run up on a lot of these names, especially stocks like Apple. So we pulled into the 20-day moving average on Apple on the daily time frame. That price right now is sitting at 166.18, and then we had a little bit of a bounce. So the two-sided trade and the thought process and the thesis behind this is you can get into this potential trade to the long side for a potential bounce off of 166, meaning that as long as we continue to ride and stay over the 20-day moving average, you're going to hold this long. The price targets that you would be looking to touch would be 169.60, 171, and 172.71. Those are the price targets that you're going to look for to the upside. Now, to the downside, this is a very simple and easy trade. If you would like to wait for this trade to sort of wash out, see if there's any more continuation to the downside in the overall markets or a bigger pullback, all you're looking for here is to get a close below the 20-day moving average. This is where you can put on a risk on trade to the downside with an overall potential to try and test 165 and then 160. Those are the two levels that I would be looking to play. Again, if you're more so bull biased and you're looking to kind of ride this continued trade higher, just understand we are on a very extended move higher here. This is a good pullback, but just understand the higher and higher you go from the original breakout, and Apple's original breakout was reclaiming this 50-day moving average with price action that sits between 145 and around 147. This is the original breakout here. We've long gone from there up about 30 points. So just understand the more you try to push this trade and squeeze this trade to the long side, the bigger potential risk you have of coming back down to the downside. So that does not mean that we're not going to bounce off this zone here. We could completely bounce off this zone, test 170, come up and test 172, maybe take some profits here, hold the runner to see if we can kind of continue that break into the 176 and take some more profits there. That's one way to play it. You can also play the bounce here, and then maybe we get rejected at the 5-day moving average. And then once we start to kind of fade back down and lose this 20-day moving average, you can start your short position here and in hopes to take profits at 165, 160.70, and then 158.99. These would be your potential profit taking zones to the short side. So depending on which way you want to look at this trade, it's presenting a fantastic opportunity for both sides. To the long side, this is a low risk trade because all you're going to do is use a 20-day moving average as your stop. And then to the short side, as long as we break the 166, you're going to also use the 20-day moving average as your stop to the short side. So if we lose it and then reclaim it, you just get out. If you're looking to hold this long, if we lose this, backtest, reject, then you get out. I hope that makes sense. If you guys are interested in trading with me each and every single day live and you guys want access to my strategies and my watch list, make sure you join my Discord. Also, make sure you guys are liked, comment, and subscribe to this channel, this video, the rest of my videos. I've got over 1,200 videos of education, technical analysis, supply and demand, trading mindset. All that stuff is involved in my channel. Make sure you guys check it out. I will see you guys on the next one.